let's go through the typical setup for a pullback trade. We'll go through a long and short. So what you'll see is you'll see that we've got on our screen that level of support that sets up, and this level here sets up just above 114.40, and it allows us to see that we've got a good level of support there. So what we're looking to do on this trade here is once we get into the short trend, we're actually, or the downtrend, we're actually looking for a pullback and then to get onto this trade. So we've sold here at 114.41. We usually, or with a trend trader setup, I usually work a sell 1 point below the low. So we've got that there. You see the low is 114.41. So we'd be looking to sell at, say, 114.40. So on a 1 point breakout, you can go in at market. Once you see those white candles, that's just confirming that you've got a trend, a downtrend. So we're in on the trade. So our initial stop on any trend trading setup will be the trailing profit, which is the little red dot, or we might have, now we can work out a fixed stop, so we decide what our stop's going to be. So I'll come back to that, and I'll answer that question once we've gone through this exercise. But basically, once we're in the trade, we're looking for a pullback because we know that at some point in this trending market, the buyers are going to try to take control of this, and there'll be a move against this initial trend. So that's what happens here at 80. You see the push up, price pushes up, but then we get this level of resistance set up. Now when you're trading this strategy and you're looking for a potential pullback trade, there are two things you're looking for. You're looking for what we call the early cross to print, which is this cross here, or you're looking for resistance to set up. They're the two things. Now, once you get the early cross, that's telling you that this resistance is going to print. That's your early signal that we're going to get a sell pullback strategy. So once that sets up, you can effectively take a trade off that level. Now, that's really a little bit more aggressive early entry. Ideally, the way we want to trade the pullback, well, you've got a few options, but the other option is that you actually, so you've got a few entry options. You can take the early cross as soon as that prints on your chart. You can take that and work the trade at that level. You can sell at the resistance point. So the resistance point on this chart for this exercise is here at 114.18. So you can clearly see that there's the level of resistance. So that's what it's printing. So the methodology behind this is that we know that price is going to do some type of retracement. We're going to sell off resistance. So it's a classic buy, support, sell resistance. And that's what we're doing. So it's like the cycle trader, but we're getting in on it with the, in conjunction, or we're adding to the trend that we were initially in. So when we talk about being in a trend trade, we're just adding a contract here. If we were trading both strategies, we would say sell one contract here, and then we're looking to add another one here. And what we're effectively doing is we're reducing our initial risk because we're not taking two contracts, but we're letting this trade confirm that it's got a valid trending move. Now, on the sell here at 114.18, our stop really wants to be about 5 to 8 points above this level, because what that enables us to do is to have a low risk, high reward trade. Because in the scheme of things, you'll find that these trades typically are 15, 20 points. Sometimes they're as small as 10. So you're not going to get big trades on the pullback. But that's okay. You're not here to kind of ride this all the way. What you're wanting to do is you're wanting to go in with a very, very short stop, very tight stop. So let's go through the entry options. Early cross, sell at resistance, so right on the resistance line. Or what you can do is option 3 is you can sell at a price slightly above or a price slightly below. So you're just offsetting your entry. That's all. So they're your three options. Now, your stop option is just a fixed price above resistance. That's it. So it's pretty easy, and you can, once you're in the trade, you can either use a fixed stop or a trailing stop. So if you decide, right, well, I like the concept of having a trailing stop because that allows me to reduce my risk, I'm going to use a trailing stop. But you might also decide that, well, I'm happy to risk 5 to 8 points because I want to give the trade as much room to hit my target once that appears as possible. So you don't initially have a target on this trade because the market will give you your target, but what you would potentially do is use a 3 to 1 target. So if you get into the trade and you've got a 5-point stop, you may be going for a 15-20 point target, or you might push it out to 30 points just in case you get one of those big quick moves down. And you can see in this trade here, if we got in on the offset, say at 17, we would have got filled. If we went in on the level at 18, we wouldn't have got a touch or filled on our trade. But at the cross, 114.05, definitely got hit. So that trade would have triggered. So the target for this trade was 113.74. You can see the targets will always print on the sell setup as a solid, as a large red dot. So they'll be twice the size of the entry, or the level of resistance. So that clearly prints. And what we usually see is that now this trade here actually does have a second sell set up, but usually I find that the one entry, one target is probably as a really good level of, or it's a reasonably high level of, or percentage strike rate. But the more trades you go for, if you say taking a second or re-entry or a third, you're just eventually going to run out of luck. But as I said, you're risking not a lot to hit your target. So let's have a look at a buy setup.